Gold topping $3,000 US announced for the first time. Factors we hear have propelled it higher include central bank buying, worries about the economy, and uncertainty over President Trump's trade war. Let's get more from a longtime gold watcher and investor, John Ing, President and Chief Executive Officer at Maison Canada. John, you've been a gold bull for quite a while now. So obviously gold enthusiasts are happy. They finally got to 3K.
Well, gold has outperformed really all markets now. And when we look at gold, it's also recorded highs in all currencies. The main reason, of course, is the uncertainty with respect to the economy. We have, of course, the Trump administration, and that has caused a lot of uncertainty. But more important, there's a global uncertainty. And that's driven people to gold. We also have the central banks. I think I've mentioned many times that the central banks have bought up something like 20% of the world's supply of gold. And then the third reason is China. China has been the big kahuna here. They have returned to the markets. They have, in fact, said internally to their insurance companies, you can now buy gold as part of their portfolios. So there's a lot of gold buying, and there's a scarcity of gold. The gold industry itself is not producing as much gold as they used to. So we have a squeeze going on. And that squeeze is reflected in fact, I think I mentioned before that there has been a movement from the London warehouses to the New York warehouses in hundreds of tons of gold. One of the reasons, of course, is the fear of tariffs. And that has caused the repatriation of gold. But there's a lot of physical gold movement back and forth, and I think there's a shortage of that supply, Andrew.
But, you know, gold has dashed investors' hopes in the past, John. It ended 2012 at almost $1,700. But by the end of 2015, it was barely above $1,000. So why won't that just happen again?
Well, I can recall being sort of like 20 years in the wilderness, and gold was just a non-performing asset. In fact, gold has done well in the last 5 years. A lot of people think that, maybe this is it for gold. Well, the ingredients propelling gold are much higher. I've been saying for a time that gold's in a bull market, and this bull market has just begun. There's an economic uncertainty, and that seems to going to continue for a while. We have Trump, and we don't know. There's no guardrails until possibly the midterm. So we don't know how much damage to that economy. And the street does not like uncertainty. Mm-hmm. So they have to look for a haven. Bond market is definitely one of them. But then, of course, in the States, you have creeping interest rates, and that hurts the bond market. Another factor as far as gold is that because of the shortage of gold and the continuing demand, that pushes it up. So I don't think that trees grow to the sky, but I think that as far as gold is concerned, this bull market is not even halfway.
What price would you start selling gold, though, John? Well,
when there's some certainty with respect to the economy, there are some parallels today with the 30s, and that's what's worrisome. The tariffs, unquestionably. The uncertainty as far as currencies, no question about it. The geopolitical uncertainty, Europe, all of these things. Perhaps if the geopolitical uncertainties leveled off, there was some certainty as far as with respect to the U.S. economy. In fact, our economy is very uncertain. 70% of our exports go to the United States. We don't know today is how much is going over and how much is and what price is going over. So until there's some certainty, my expectation is that we are going to have higher gold prices and, in fact, gold stocks themselves. Gold stocks, you would not think, is in a bull market. In fact, they have been laggards, and we've talked about this before. Mm-hmm. And my expectation is that the average gold price now, all-in cost, is about $1,500 an ounce, and you have a $3,000 gold price. And if you're a Canadian producer, you have a $4,000 gold price. That's a lot of money, a lot of free cash flow. And what the gold miners have been doing is buying back shares and paying out dividends. So I think that there's still a little bit of room here.
Yeah, I'm just looking here. I guess the currency throws things off. So gold has pretty well doubled since 2020, according to my Bloomberg screen, whereas the TSX index, maybe we could put up a 5-year chart for gold there. And whereas the XGD, which is an ETF that tracks the Toronto gold shares, is up about 130%. But I guess currency throws that off because the gold price is in US dollars and that TSX index is in Canadian funds.
That's right. But the gold stocks have been a laggard. And in fact, all the gold miners at the recent PDAC last week, everybody was happy about the commodity price, but they certainly weren't happy about their stock price.
What about Newmont and Barrick? They really have lagged, haven't they? Lagged the group.
Well, Newmont, there are reasons. Its costs have increased. As we know, they did that big takeover of Newcrest, but immediately they took a write-down, and then they discovered or they disclosed that, in fact, their mine costs were creeping up. They also bought Goldcorp earlier, and in fact, that's what they ended up doing, is selling some of those gold mines, and they're still left with some high-cost mines. So the cost picture really surprised investors. So it hurt Newmont, and I think it's going to recover, but it's going to take some time. They have operations in 4 continents, and that takes a lot of management. Barrick, on the other hand, they looked at their mine costs much earlier. They streamlined. They are set up for reserves. They just added the reserves. One of the problems, Andrew, for the gold miners is they're not replacing the reserves that they dig out of the ground. So when I look at some of these gold mines, I'm looking at those who can increase their reserves year over year. And Barrick has been one of them. Agnico Eagle has been one of them. And that's one of the things that you should look at.
John, always great talking to you. Thank you very much indeed.
Good to be here, Andrew.
John